you didn't know, there are a lot of fires happening in the United States, including a little bit their stock market. So let's get right into it. The first half a month of 2025 has not been too good for stock investors around the world, especially the United States. Too busy to find stock ideas? Check out Fire Pro to shortcut your research time and effort by 90%. 10% off link in the comments and description. I think for Malaysia, we dropped a little bit. I know the Malaysian one look a bit steep here, but bear in mind this is...
It's just 30 points only.
Yeah, 38 divided by 1,006 is not very big, but still it's down. And the US is down year to date, nearly 1.5%. It's a multi-trillion dollar market, so 1.5% is many billions. So we're looking at Bitcoin as well. I think it hit the high of 100 over 1,000. I think it even touched close to 110, right? Last year.
Yes.
But now it's about 94. But gold is holding a little bit better, actually, right?
Correct.
It started the year, this is year to date, right?
Yeah, this is year to date.
So it started year 2060, 2640, and now it's 26, almost 27, right?
Yeah, so what this means is that the investors are more cautious. So they're not going to be putting a lot of money in Bitcoin, but they're putting in gold now. So the reason why there was a tank is because there was a delay in terms of interest rate. I mean, if you look at the minutes of meetings, right, they already released it to the public. Basically, they are trying to say that inflation is going to be here to stay for a longer period. And they also did mention that don't expect a lot of interest rate cuts for 2025. Initially, they say 3. Now the market thinks that it's going to be 2. So yeah, it's getting lesser and lesser. And you can see that for January's target, they are predicting that 94% of the people thinks that there will be no rate cuts for January. So I think the key thing will be looking at 2 months from now, which is March. So March, they're going to have another Fed meeting. So we shall see whether they will decide to do a rate cut by then or they will postpone again. The yield curve also, 10-year and 2-year, has been rising a lot. There were also like some research houses are saying that the US 10-year bond is going to go up to 5 to 6% soon, which is not a good sign, which means that the Fed is not going to be cutting any interest rate anytime soon, or potentially even they may need to hike rate because the economy seems to be quite strong in the US. So there is no point for them to cut rate when the economy is just doing very well.
Yeah. Of course, the market behavior today is not always in prediction of what the Fed announced. I suspect it's also after these rate hikes, what do they foresee?
Yeah.
So they will basically say it will continue the lack of rate hikes.
Yes.
So it's not just the upcoming reduction of rate hikes. It's after that. So
yep. So yeah, this is the 10-2 yield curve. You can see that whenever the 10-2 uninverts, which means they're hitting the positive territory, right?
That's why you get a recession.
Yeah.
Right?
So right now we are seeing another uninversion for the 10-2 over here. But it can go higher a little bit more until the market thinks that it's overheated. Then that's where they need to like cut rates and everything. So the cycle is going to be continuing.
But bear in mind, if you go back to the 80s as well, the downturn happened during the inversion as well.
Yeah.
Right?
Correct.
So by and large, 80% of the time, it will happen after it uninverts, meaning it goes above this black line here, you see, in the middle black line. But there's a chance that it could just happen.
Correct. So, but the one thing that is different from today and the previous recessions, right, excluding 2020, is that last time they have a lot of like debts, companies especially, like those big names, the tech companies, they have debts. They are not really net cash. But this time, a lot of these companies' business model, they transited into asset-light business model.
More tech-based.
Yeah, so it's hard to say that the major crash is going to come because they are so well protected already. The only thing is that probably we will have like a muted growth instead of like continue like growing an uptrend.
That's one way to look at it. Another is people who bought into a lot of these tech stocks are not purely fundamentals driven also. So they could bid the price up to very big valuations.
Yes.
I mean, I think it's similar to the early 2000s, right? Which is here, right?
Yep.
Where a lot of these internet companies weren't heavily indebted also, but you still saw a 50-60% decline, mainly because of valuation. So that's another aspect to look at.
That's what free money does to you lah, when you get like a zero interest rate. So yeah, the news, this is by The Edge. They say that the market is still pricing in a 75 basis point cut in 2025 for most of these tech companies. So that's why you are seeing like some sort of weakness in terms of S&P 500, Dow Jones, Russell, all those index are going down, because they thought that the Fed will cut 3 times.
Okay.
So right now, I think they are trying to like pull the handbrake, and then they're starting to sell some position, and they think that maybe it is too optimistic to think that the Fed will cut so many times. So yeah, potentially it could be have more weakness in terms of the market for the US as well as Malaysia. Okay, so this is also another adding oil to the fire. It is the non-farm payroll
The jobs are
is getting better and better. Unemployment rate, initially they estimated a 4.2%, right now it's 4.1. So it's still showing a very strong economy sign. There's no like downturn, no recession, no nothing. And yeah, it defeats the purpose of the Fed trying to like curb inflation because they're trying to like keep it down to like 2%, which is, I think it's very, very too optimistic already if they want to keep it down 2% at this current like rate, right? So yeah, probably you have to foresee inflation to be here to stay for quite some time. And what's interesting is upcoming few weeks, there will be a few companies that is in the tech space that will be reporting their earnings. So I think this also will be another key to see whether they can sustain that particular valuation that the market is giving them. If they start to report like drop in terms of revenue or profit growth, right, I think there will be further weakness. So make sure to pay attention to these few particular companies that is going to be announcing. Okay, so that's the US. Now Malaysia.
So I think the big news, literally, as we were preparing for this video, right? The news dropped that the US, we already knew that they had 3 different classifications for countries. The blue is they are quite friendly.
Yes.
The second is yes and no mix, and then the red they are unfriendly.
That's the
so unfriendly, no surprise. You see countries like Russia, China,
Myanmar,
Iran, Iraq. If I'm not mistaken, Myanmar. I think that is Cambodia. Yeah, Cambodia. I think places like Venezuela. And Malaysia is classified as yellow.
Second category.
Yeah, is Singapore blue? It looks like they're blue, right? See, there's a dot there. I don't know whether that counts as blue. Man, such a small country. Anyway. So we are yellow, and literally as we were preparing this video, they said that there will be some limited access control, right?
Yes, correct.
Yeah, walk us through what in the world is that? Actually?
Yeah, so in order to get approval for the US market to ship some of their AI chips to Malaysia, right? They need to go through this some sort of like act. So this country that wants to get these let's say NVIDIA chips to their countries, they have to give like these security and human rights requirement, which is set by the US. And then the US will need to give them like a verified end user status, which is some sort of like their policy. So there's like more requirement for this kind of company. The reason why they're doing this is because they don't want the enemies of the US to get hold of this AI stuff. Yeah, so that's why they are preventing like the second tier, whatever they classify as the second tier countries to actually get hold of the US assets indirectly. Yeah. So the reason why is because previously, the Malaysia did once export stuff to the Russia in 2011 for military purposes, and that item they got it is from the US. So it happens before. So that's why the US, this is actually not really Trump, it's from the Biden administration. They are being very cautious about the how the second tier countries are using their assets. So that's why they are putting more restrictions. And which is also why I say like BRICS, right? Maybe they want to target BRICS also.
Yeah, I mean, that's why I don't understand why Malaysia decided to join BRICS. yeah. Anyways.
So that's why you are seeing also there's a lot of like weakness in the data center stocks in Malaysia right now.
Yeah, I think as of this recording right now as we speak, I think the YTL power is down like 7-8%, something like that.
Yeah, it's quite a lot. Not only then Nation Gain. Basically every single data center related stocks are down. So fun flow, what's interesting is that there's a few companies that the local institution got initiate quite a positive outlook for the company, especially Nation Gate, the first one. This is actually reported in the other Edge. So they say that Net Nation Gate is going to have a good earnings growth in the future, but the thing is that they are selling it. So they are giving like a very contradicting statement. Like you say, on the one hand, you say yes, it's good, but on the other hand, you are selling it.
Yeah, so, but this is behavior that we should expect, right? If people want to have a lot of shares and they want to offload and they have a vehicle that they can influence the public, this is how it is.
Yep, exactly. And the second one that is interesting is Bumi Armada. So foreigners are also getting this. I think they are very interested with the corporate exercises that is going to be happening very soon. And a few companies, Dayang, Genting Malaysia, and Genting. The reason why retailers are buying obviously is because the local institutions are initiating report. They are basically giving like a very handsome upside. So for Dayang, they say that there's a 70% upside. That's why I think it attracted a lot of retailers to buy.
Yeah. Relatively, Dayang is a small company, right? Yeah. Relatively. So 10 million is a lot.
Yes. And then last one, it is the airport or the MAHB.
Yep.
So some of the foreigners and also retailers are cashing out because the prices are going up. I think they are going through a privatization very soon already. They need to come out with an announcement. I think is it by this week or next week already. They need to like finalize everything and announce whether is it going to getting private for 11 ringgit per share. So yeah, so this is some of the stocks that is initiated by the Edge and also analysts. So analyst is basically your local institution. You can see that this is the fund manager's list of stocks for 2025, and then you can see the Edge. And what's cool is that inside Xifu's app, right, you can see where, for example, like Duo Pharma. Let's say you want to analyze Duo Pharma, where are they placed in the pharmaceutical industry. You can see that they are over here. So what the analysts are thinking is that their investment risk is slightly little bit high, and also the business fundamentals are not so good also for Duo Pharma. But if you look at A Health, which is their competitor, and also YSPSAH, this one is slightly better in terms of fundamentals. But the one that has the lower risk is actually YSPSAH, probably because the valuations are little bit more cheaper.
Right.
So yeah, this is a very, very interesting scatter plot. If you want to check out, you can see Xifu app.
Interesting.
But yeah, then you can do the same for other companies as well if you want to see where do they rank in terms of their peers. So also want to highlight, I think we talked about this before, the institutions are also building up cash for at least for September 2024. We haven't get the figures for the December yet. But yeah, it's an interesting time because right now we're also seeing like the market is going down. Most of the, if I were to guess, is basically the local institutions are selling it. So probably the cash as a percentage of AUM most likely will be increasing also. So I think this just show that even though they sound very bullish on paper, you can see that they are saying that 2025 is going to be a good year. Later we're going to show you what is their KLCI index predictions. But on the other hand, also they are trying to like build cash because there's just too many uncertainty, especially like the data center news that just pop out today, right? Yeah, with Trump and also the US and also the AI, there's a lot of uncertainty going around. There's a geopolitical tension, and yeah, it's not going to be an easy time for 2025. So the final thoughts over here, it is March 2025 will be key because that is where the next Fed announcement will be releasing. They will be basically going to say whether they will decide to cut rates or will they reduce the rate cut. So yeah, I think this date will be quite important. Most likely we can already see what's going to happen on February because market is always forward-looking. And also we did a video on this. The US Fed just crashed the market because they are back then, 2 weeks ago, they did already mention that inflation is very persistent. It's hard for them to like reduce the inflation rate. So that's why their narrative kind of like slightly corrected the market 2 weeks ago. And right now we are seeing another dip again. Second thing is, most analysts are still bullish. You can see Kenanga, RHB.
Of course, this was 31st December. You never know. Now the market not so good. They might change their minds because analysts change their minds quite a bit.
Yeah, they always follow the market on in the short term.
Yeah, which is very weird because people expect analysts to predict share prices or index prices, but the index prices and the share prices is part of their consideration when they make their analysis. Very interesting.
Yeah.
Anyways,
yeah. So that is their behavior. But on the other hand, they also are building cash.
Yeah.
So I think that's a very important note to take.
but I think even when they build cash, right, it's rising since September, but it's still lower than September 2022. So from September 2023 is up from 6 to 8, but September 2022 is down from 14 to 8.
Yeah, it's definitely slow in terms of buying. Okay, and then the last one is risk off. The UBS analysts, they basically just say that they're going to be buying bonds because bonds rate are looking too attractive right now. They think that it's going to go up 5-6%. So that's why they are trying to buy bonds. I think previously also we did a video, you can watch it over here, that I think Bank of America, the research group, basically they say that fund managers, they predict that their position is going to be 25% bond, 25% cash, 25% stock, and 25% real assets, something like that. So yeah, they are basically trying to diversify all of their asset classes. And right now, they are going on a risk-off mode because of this Fed potentially not reducing rate. So that's why valuation might start to trim down a little bit. So yeah, that is basically what is happening with the market right now and why you are seeing there's a tumble in terms of the index and also some of the share prices in Malaysia and also in the US. So yeah, that's about it. And this is FirePro's portfolio performance. We also initiated some positions recently for FirePro Malaysia and also FirePro Global. So if you want to check out what are the names over here, so this is the censored one. If you want to see the uncensored, you can go hop on to our FirePro program. You also can get a 10% coupon code. Links will be in the description and comments. And if you are a conservative investor who likes dividends, and we think that dividends is going to be the catalyst for 2025 actually, you can check out our boring portfolio. So far, it has been doing very, very well, up 14.9% since April 2024. And we also do small little write-ups for each of these companies. So if you want to understand how we assess these companies, how we evaluate this management, the risks, what is their valuation, all of those good stuff are inside FirePro.
Indeed.
So yeah, if you want to get a taste, you want to see how we do our write-ups, we have a free sample for you. The links will be in the description and comments below. So that's about it for today's video. See you guys next week.